Good morning, good morning, good morning, Mark. Happy Sunday. And I told you I'd get back this weekend on the tax issue going forward, what we thought. And first of all, I had mentioned in our last phone conversation the homestead, where it's homesteading exemption that allows us to lock in our value and not to go up more than 3%, or cost of living index, whichever is the least. And I said at the time also, "Whoa, wait a minute, Rick Frissell, I don't think that applies to vacant land," and it does not. So based on the fact that we do not have homestead exemption until we build on it, I took the approach of future values and future assessments, which does not have a 3% cap. And that number came out over the last 3 years to 8%. But let's look at some things that we have control over and what we have no control over, but it goes to taxes, except for death, right? That's what they say. You've probably seen this. I'm going to run over some things real quickly, and then this is the Hillsborough County Hillsborough County Property Appraiser's website. I'll go ahead and send you each of these links. But let's take a look at trim, and this breaks down where all the tax money goes to. Of course, you care about the aggregate, but where this comes into play is that what we have is we have our millage rates for both the here's what I was looking for. We have the millage rates for each of the revenue requirements for 2017 right here, and here's 2018. And when we really get down to it, 2017 was 1628, and 18 was 1631. So you see only a $3 increase, yet taxes came up to 1726, another $100 more. And the reason for that is that these are the proposed increases for taxes, and that's the part we said that we can't control. So at the end of the day, that's where this number of 1726 came from. So now we have an explanation of our bill. Now let's talk about the question that you had going forward. For that, we want to come over to the tax bills. And what I did for each year is went back to 2017, and I went to 2016, and I looked at the numbers, which you've also already seen. And from 2015 to 2018, the increase was approximately, give or take, 8 to 8.5%. Per year. That being that that's the real dollar increase, and that already takes into account land value and millage rate increases. So here's a link that you may or may not have seen, and this is the best that we can come to. And before I hit that link, let me tell you the number that I came up with based on the last 3 years' history. I came up with a number of right around $2,000 will be the assessment for 2019 in taxes, and that was just based on history. They have a property tax estimator here. So before I click that, let me just say that let's, as an example, say that we closed in just for easy numbers, let's say the end of June. The seller would owe the first 6 months of whatever the taxes turned out to be for this year, and you would owe for the balance, and then it would go through a whole new assessment of in 2020. So let's see what the property estimator page says. So we go in here, and it's already plugged in the purchase price of somewhere. I don't know where, because I think they paid less than that. But we want to get out of that. Oh, I'm sorry. I know where that number comes from. If you recall my conversation, the county puts an estimate on the value, but they started putting in lower values because it was getting too expensive to fight every single tax owner that said my property's not worth that amount. So what the county started doing was they started putting a number lower than estimated value, and I gave you an approximate number of 30%. So that works out as a nice number for us to play with at 130. That doesn't mean I'm right. It certainly doesn't mean I'm right. It just means that that's a number that we can play with because the assessment may be higher. And let me segue for a moment. You're only going to end up paying the amount of the contract price or the appraised value, whichever is less. So if we end up negotiating at 139 and the appraised value comes in at 130, we can either walk from the deal or they can take it at 130. So I'm sure you know that as well. So let's put 130 in here. Hit our return, no homestead exemption. So we're going to calculate. And they estimate $2,000 to $2,400. So my estimation based on history came to $2,000. Their estimation of $2,400 is their cushion. I call it a cushion so that we can't come back later and say, well, wait a minute, you said $2,000 and it came out to $2,400. So what would happen is at this point is the base value would then become their assessment for this year. So this purchase price will likely have some say into the assessment value. But I would estimate that the years going out would always fall within this range before you start building and before you took your your homestead tax exemption. So I hope after you replay this and digest it, it makes sense. But I've been known to not make sense before. So feel free to call and discuss further. And I wish you a very blessed and happy day.